Hey everyone, welcome back to Corporate Decoder, a place where we decode those complicated corporate filings, and today we're diving into Guess Inc.'s latest report, and let me tell you, it's got some interesting twists and turns, especially concerning their big planned merger. Before we jump in, if you love getting straight insights from these corporate documents and want to stay ahead of the curve, make sure you are subscribed. And hey, we've got a fantastic community over on Discord where we break down these kinds of things even further. So check out the link in the description below. Alright, so Guess Inc. has filed a Form 8K, which is basically a report for big, important events that happen between their regular financial filings. The main story here is about their proposed merger with Authentic Brands Group. This is where Guess Incorporated plans to become a privately held company owned by another entity. It is a pretty significant move, and it seems like there has been a bit of a stir from some shareholders about how all this is being handled. So the deal was announced back in August of 2025. The plan is for Guess Incorporated to merge with a company called Glow Merger Sub 1 Incorporated, and essentially Guess Incorporated will continue to exist but will be owned entirely by Glow Holdco 1 Incorporated. Think of it as a big company buying out all the public shares. Now, stockholders are supposed to vote on this merger. The special meeting where they'll cast their votes is happening on the 21st of November 2025, but it looks like not everyone is happy with the information they've been given so far. Apparently, some shareholders have sent in a bunch of letters, totaling 15 now, saying that the official documents about the merger are missing important information. On top of that, there have been 7 requests for the company to hand over more information to investigate the deal further. It's like a shareholder revolt brewing over disclosure. Things have even gotten legal. 2 lawsuits have been filed in New York. The first one, called the Williams complaint, claims that Guess Incorporated did not fully reveal important internal forecasts and other financial and conflict-related information that shareholders need to judge if the deal is fair. The goal of this lawsuit is to stop the merger until all the alleged missing information is provided. And then just a day later, a similar lawsuit, the Clark complaint, was filed by another shareholder. With the same lawyer, it makes pretty much the same claims and asks for the same things. Guess Incorporated, however, believes these claims are not valid. Despite the legal challenges, there has been a bit of good news on the regulatory front. The merger got approval from antitrust regulators in Cyprus. So while shareholders are raising questions, at least some government bodies are giving the green light. Now, the company is adding more information through this filing, sort of like an update to their earlier filings, because they believe it helps shareholders understand the situation better, even if they don't think they legally have to. You'll see some text that is bold and underlined. That is the new stuff being added. Let's look at some of the background details that have been updated. Back in August of 2024, the board set up a special committee of independent directors to look into moving the company's home base to a place outside of Delaware. This committee hired lawyers to help them with this review, and to do this, Guess Incorporated spent about $500,000 on legal services for this committee. They also spent another $200,000 on legal fees related to some previous shareholder lawsuits that have since been settled. It also mentions that some of the lawyers hired for these new reviews, Young Conaway, were also involved in those earlier shareholder lawsuits. Guess Incorporated paid about $45,000 in legal fees for that. The company is showing these figures to be transparent about related costs. Here is where we get into some interesting financial analysis. Their financial advisor Solomon looked at other publicly traded companies similar to Guess Incorporated. They use metrics like enterprise value to adjusted EBITDA, which is basically the total value of the company divided by its earnings before interest, taxes, depreciation, and amortization, adjusted for unusual items. They compared Guess Incorporated's potential valuation multiples to those of companies like Abercrombie & Fitch, American Eagle Outfitters, and PVH Corp. For example, the median multiple of enterprise value to LTM adjusted EBITDA for these comparable companies was 4.4 times. This helps the financial advisor determine a fair value for Guess Incorporated. Then Solomon also looked at recent mergers and acquisitions of similar companies. They examined multiples like enterprise value to LTM adjusted EBITDA for deals involving companies like Chico's, Fars, Hibbett Inc. and Foot Locker Inc. The multiples in these deals range from 4.9 times to 6.4 times. This gives another perspective on what Guess Incorporated might be worth in a sale. They also looked at what Wall Street analysts were saying. As of the 18th of August 2025, analyst price targets for Guess Incorporated stock ranged from $12 to $23 per S-Hair, with specific targets mentioned from UBS, Telsey Advisory Group, and Small Cap Consumer Research. To raise also an interesting disclosure about the financial advisor's parent company, Natixis. It points out that Natixis does a lot of different financial activities, and they have procedures in place to prevent conflicts of interest. They also mention that Natixis and its affiliates might have business dealings with Guess, Incorporated, or the companies involved in the merger, which is pretty standard in the financial world. Solomon, the financial advisor, was hired on the 2nd of April 2025. They are set to receive a retainer fee, a fee upon delivering their opinion, and a significant portion of their compensation, about $9 million, is contingent on the deal actually closing. This means they are heavily incentivized to see the merger through. Now for the really juicy part, the future financial projections. These are unaudited, meaning they haven't been fully checked by accountants yet, but they give us a glimpse into what the company expects. Back in January, the projections for Guess Incorporated showed total revenue in fiscal year 2024 at $2, $777 million, and net earnings at $174 million. But looking ahead, the projections show net earnings dipping in fiscal year 2025 to $105 million. Then bouncing back and growing steadily through 2030, reaching $142 million by fiscal year 2030. That initial dip in net earnings might be something to watch, but the projected steady growth afterward could be a positive sign if they hit those numbers. Fast forward to the June projections and we see some slight differences. The total revenue for FY 2024 remained the same at $2, $777 million, and net earnings also stayed at $174 million. However, the June projections show net earnings in FY 2025 at $99 million, slightly lower than the January projection of $105 million. After that, the June projections also show steady growth, reaching $149 million by fiscal year 2030. The change in projected net earnings for FY 2025 between the two sets of projections, even if small, is a good reminder to always look at the most recent information. So, what's the big picture here? Guess Incorporated is in the process of being taken private, and it is generating a lot of attention from shareholders who feel they might not be getting the full story. The company is proactively releasing supplemental disclosures to address these concerns, which is a good sign of transparency, even if they believe they are not legally required to do so. The lawsuits and shareholder letters highlight the importance of clear communication and full disclosure during major corporate transactions. Despite the legal chatter, the underlying financials and future projections, albeit with slight variations between the January and June updates, suggest a company aiming for long-term stability and growth post-merger. The valuation analyses done by Solomon provide a benchmark for the deal's fairness, comparing Guess Incorporated to its peers and recent market transactions. In my opinion, the company is trying to navigate a tricky situation. The fact that they are proactively adding more information shows they are paying attention to shareholder concerns, which is important for maintaining trust, especially during a big change like a merger. The shareholder lawsuits, while potentially a distraction, often lead to more transparency, which ultimately can benefit all investors. The varied projections from January to June are not drastically different, but they do underscore the dynamic nature of financial forecasting. The key for Guess Incorporated now will be to successfully close this merger while continuing to build confidence with its shareholders. Alright, that is our breakdown of Guess Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.